All right, so let's go ahead and get started here. Hello, and thank you for joining me today. We are going to continue our series about trade plans, and going to bring over the trade plan outline. And as we look at that, what we're going to be talking about today is the ideas of personal growth. Okay, so we're really going to be covering motivation, sticking to our plans, and really just the personal growth that happens as we seek the ideas and principles of being a very consistent trader. Okay, so those are the topics that we are going to be looking at today and discussing in today's trade plan series. So with that being said, let's get started here. First off, I think this is a really important slide. I know it's kind of a cheesy little picture here, but we are risk managers, okay? So we are always balancing out these ideas of risk. Win or loss. I'm sure several of you here are familiar with my ideas, or in my little graph of the probability of a losing streak and what that means to me. So again, just kind of reiterate that idea and that principle. That's really what we're looking at. Okay, so I think it's just kind of interesting that when everything is said and done, it's not about picking good spots. It's not about red or green in the account. It's about risk management overall. So I think it's really important that we disassociate ourselves with our money when we're trading, because if you have any type of emotional attachment to that, that's going to come through in your trading. It's going to subconsciously affect the way that you're looking at the market, and it's going to affect your trade plan. Okay, so I think that it's extremely important to realize this super simple idea. Okay, now obviously, I feel that one of our primary objectives as traders is be consistent winners. The wins might not be, buying the low and selling the high of the day. Uh, that's to expect that we can do that day in and day out, I think is unrealistic. So if you're unfamiliar with these pictures on the screen here, the first one is Ed McCall, or Cash McCall as we like to call him. He's a very good trader that's been in our room for a number of years. And then the other picture is of myself. So we really are looking just to be risk managers, or we're money managers. That's all we are. And we're just looking for consistent growth. It doesn't have to be steep. It doesn't have to be, it doesn't have to look good. It just has to be consistent. Okay? So, and keeping that mindset into place, your mindset is huge. If you think that something bad is going to happen, then guess what? Something bad is going to happen, and that's it's one of those mental things that go on. And actually, we have Michelle Hurlbutt, our trading coach, in the room with us today. So, Michelle, I'm going to go ahead and unmute you here, and I was wondering if you can maybe talk about that idea of positive reinforcement and how our brain kind of makes whatever we think happen, because I know we've talked about that a few times.
Sure. Hey, everyone. So one of the things that goes on in our brains is what we focus on, we achieve, right? Whether that's a good thing or a bad thing. So if we're constantly focusing on the negative, our life seems to be filled with more negative things. Part of that is perception. Like, let's say you're looking for a car. You haven't been looking for a car for a long time, but all of a sudden you see a car, you're in the market for a car, and so now you start looking at all these cars. And now all of a sudden, let's say your favorite color is red, and you start seeing all these red cars everywhere, which you never saw before. It's because your mind is focusing on it. They were always there. It's just now your mind's more focused on it. So you're seeing more of them. It can be the same thing with negative outcomes. If you're worried about a lot of different things in your life, if you're worried about your trading, if you're worried about making the wrong decision, these things tend to happen more frequently. And part of the thing of having a trade plan is to allow you to have that consistency and to take that worry out of it. So if we focus on the positive, more positive things happen.
Absolutely. And I like this slide because down here on the second, well, down here on this paragraph here, it says objective observations of ourselves. Means not harshly judging ourselves, and we're our worst enemies. Because we're like, oh man, why did I do this? And it's so easy to fall into those type of attitudes when things aren't turning out the way that you thought that they were going to turn out. And then we become our own worst critic, and by being our own worst critic, we actually turn ourselves into our own worst enemies. So that's something that I've seen in my personal trading. It's like all of a sudden the battle isn't even with the market anymore. The battle is with Gabriel. And why did he make such a silly decision? Why did he make such a poor choice? Like, what am I thinking? Like, why am I doing this? Those type of thoughts. We need to really cut those off before they go very far at all. Cut them off at the pass. So, but developing a winning attitude, and that's really what the profitability of, or the probability of a losing streak chart did for me, was it quantified the ideas that if I'm really winning, let's say, let's make it ridiculous. Let's say 95% of the time, I'm expecting for my next trade to be a winner. Okay? Now, technically, I realize that my winning percentage is closer to 80 to 85% at a time. And during days like today, like I didn't take on a losing trade, but that doesn't really matter. My trading has nothing to do with your trading, and vice versa, because we have to realize what happens at the end of the day when we get those broker statements, and developing that winning attitude that says, for me, I look at the probabilities and I say, you know what, statistically, I win the majority of the time, therefore my next trade is going to be that winner that I was looking for. Yes, I've just had a loss, but you know what, that loss gets me one step closer to a win. So thank God for that loss, because that means statistically I'll get a win just that much sooner, So that's how I look at it now. And I hope maybe that helps a little bit with your particular outlook on all this stuff. Does that make sense? Okay, good. Good. I'm glad that it's echoing well. All right. So let's get on to our next topic here, which is self-discipline. All right. And Remember how I was saying, like, cut ourselves off at the pass? You know, uh, what we really need is to be able to redirect our focus. You know, um, cut yourself off at the pass. Focus on what you should be focusing on, not what is self-destructive. So um, I know in some of my personal battles in trading, stops have been an issue. And dealing with the stop loss and where to adjust the stop loss to, how to handle that, when to adjust it, when not to adjust it, when just to leave it alone, you know. All of those things need to be written out in your trade plan. Now, it's not really under the same category as what we're talking about here, but it still needs to be there. And probably that type of a thing is more so in what most people consider their trade plan. But I think it's very, very important. Okay? So what we believe is what's going to happen. So instead of getting down on ourselves, cut ourselves off at the pass, think positive thoughts. If you experience a loss, you're just one step closer to a win. That's what keeps me going. In the rules of probability and statistics, a loss event is one step closer to a win event. Then all you have to have is make sure that you're, well, never mind. That's getting out of the subject, really. But cut yourself off at the pass, stay disciplined. See how I did that? Don't get sidetracked with the rabbit holes. Okay. So that's really what we want to do. You know, we want to stay very focused. We don't want to deviate ourselves or to deviate our thinking about our most recent relationship, or a relationship issue, a child issue, you know, what color the sky is, whether it's raining or snowing, what the newsman is saying, or what's going on TV, or that commercial about some new trading software on CNBC. You know, it just doesn't matter. You know, in fact, the less distractions that you have when you're actually looking at this stuff, the better. And just a little bit of that personal stuff coming back into play. I've been sharing a lot of my setups, a lot of my how I do things. The software was written around my approach. All of the stuff that I share with everybody, and that makes it a little bit more interesting because I have to stay focused to make sure that I'm following my rules and it stays very consistent. You know, so realize that self-discipline is we need to take steps to do that. And I know in the mentorship program, one of the best ways to make sure that somebody knows something is for them to teach it. So we're going through the mentorship and having the students teach the mentors, okay? Because we really want to make sure that we're driving home these certain key points, and it becomes very consistent, and they're staying on the same track, time in, time out, okay? So that's, I think, all part of discipline, all right? So let's get into this. 5 fundamental truths, all right? Trading is pattern recognition. I consider myself a one-trick pony, all right? I consider my trick to be buying and selling pullbacks, all right? I don't care that the market raced up 100 points or 100 ticks or whatever. If it doesn't meet your rules, then there's no reason to feel bad because you technically followed your trade plan by staying out. Did the market make a big move? Yes, but who cares what the market does? I shut off everything at, after like 2 hours, I don't care what happens during the rest of the day. Um, and I think it's important to stay focused in that type of an idea and approach. Just because we want to eliminate that emotional tie that you see even from a big bar plotting on your chart and you not being in. You know, it doesn't matter at all what the market does. I could care less what the market does. Absolutely care less. um, it's just following those rules. Okay. So anything can happen, and our job is to recognize our setup and pull the trigger. That's it. That's that's all that we have to do. So once we have that done, then it jumps into another idea. Like in programming, um, when I develop a piece of software, I have to have a game plan of what I'm doing. Okay. So I have an overall idea. I make out all the lists of the different aspects that I know that I'm going to need, and I put titles to them, and all this kind of stuff. And then I come in there and I say, okay, this piece needs to link with this piece, and this piece needs to link to that piece. And then I start filling in content, filling in the actual logic and blah, 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 all the equations and stuff of that nature. So I think it's important for us to have that same type of mindset. Okay, so step one, what do? We enter a trade when these conditions happen. Step two, we don't need to know what's going to happen next. We just follow step two. Step three, this is what we're going for. That type of an idea is going to make this stuff a whole lot easier than to worry about, okay, I'm trading now, and this market is up, that market's down, the news guy is saying that, my VIX reading is this, the market breadth and depth is that, the market weighs so many tons right now, and blah, 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 blah. And all of a sudden you're like looking at everything except for your simple plan that you've laid out for yourself. And that's why building this plan, building all these rules in your trade plan is so important, so that we can stick with this day in and day out and measure those goals long term. Okay? So, 7 principles of consistency. All right? Here they are. Identify my edge. You have predefined risks for every trade. Maybe you're willing to go up to 100 ticks for a trade. Maybe you're only willing to risk 5 ticks for a trade. You need to set all that stuff beforehand, and then completely accept what you're doing. It's kind of like in baseball when the pitcher throws a pitch, you swing your bat, and whether it hits or it misses, you're okay with that. Now it's funny because the baseball player usually only wins about 30% of the time. Like they might have a 300 batting average or something like that. But we're looking for an extremely high batting average, something so that we can make money consistently. Or maybe you don't mind only batting 300%, or I'm sorry, batting in the 300s. And if you don't mind only winning like 30% of the time, then when you do have runners and things of that nature, then they really have to make back for all those losses. So it really depends upon your personal style, which one you feel more comfortable at. But so far, I have yet to meet a trader that is okay with only winning 30% of the time. I haven't seen that. So I just think that's interesting. We all like to be right. So that's kind of how I've developed my system, and I hope that makes sense. So I'm not going to read all these things for us here, just because I figure that pretty much everybody else can read. And I wanted to really cover on some of the highlights of things. Okay? So, creating consistent beliefs. How do we do that? Well, I do it through statistical probabilities. Okay? But my statistics, my probability of a losing streak is just the same as what a casino has. They realize that out of everybody that plays, 90% of the people lose. All right, they're just playing statistical probabilities. Now, yes, some of the games pay out, 50-50, but overall, people that embrace that type of thing, they usually stick around too long, or they don't know how to cut their losses short and extend their winners, because so many of those people don't use statistical probability. So I think that's very important, and that's really what differentiates trading from gambling. This is all about statistics, all about probabilities, all about having a plan and sticking to it. Okay? Whenever you're getting into the market saying, you know what, I knew that this was going to go up, and it's got to go up because it can't go any lower, you're no longer basing your decision on statistical probabilities or possibly on your setup. You're basing your belief on your gut feeling. And that's not what we're trying to do here. We're trying to take something that you've proven for yourself and just repeat it like a machine. Repeat it like one of those slot machines. It does the same thing every single time. How boring is that? It's extremely boring. Trading should be extremely boring. There's nothing exciting about trading at all. And if you find trading exciting, then guess what? You're probably leaning towards the side of the fence a little too much. Now, I think it can be extremely intriguing. Mentally, it can be very challenging, and it definitely does that. But it should not be an emotional roller coaster, And if you find yourself being an emotional roller coaster, thinking, why am I doing this one day, and the next day you're on cloud nine, you're probably gambling and not trading. And it can be that close, So those are the types of things that we really want to stop before they start. And I don't know if Michelle has anything to add here or not, but in my mind, it is a fine line, It is a fine line.
I agree with you. I agree with you, Gabriel. It is a fine line, and if you find that your emotions are getting involved with yay, I got a winner, boo, I'm in a bad mood, I had a losing day, at broad ends of the spectrum, of course, when we have a bad day, we're not as thrilled as when we have a good day. However, they shouldn't be the big production that happens like in Las Vegas or something like that when you're gambling, how excited you get, how in the moment you get. And it should be more like a computer program. I mean, Gabriel built this Apazones around his methods of trading and how he traded and how he sees the market, and he had to put many, many lines of code in there to create these zones. And our trade plans are basically the same thing. They're lines of code for a specific aspect of it. and they should be just if-then statements. If this happens, then I'm going to do this. If this happens, then I'm going to do this. And if none of these things are happening, then I'm going to do this, meaning sit, wait for one of those things to happen. These are all important things, and then there's no emotion around it. You don't have to worry about how many trades you take or don't take in a day. You just keep going as the if-then statements happen, as you see them come to fruition on the charts. It takes all the emotion out of it.
And yes, it does take all the fun out of it too. So.
To some extent it does that too. But not completely, otherwise we still wouldn't be doing it.
And it's, Tom says if a baseball player hits a career .30, he's in the Hall of Fame, you know. And that's, realistically, that's just 30%, you know. Personally speaking, if I did only 30%, well, I wouldn't be doing this anymore. Let's just put it that way. So, yeah, let's just put it that way. Is there any place for intuition in all of this?
Intuition?
Yeah.
So, yes and no. And let me kind of get a thought around that a little bit. Intuition is our subconscious mind trying to tell us something, good or bad. That feeling in the pit of your stomach when something's bad, the hair raising up on the back of the neck when something's bad, the urge to go out and take a walk, and all of a sudden you see a bright, clear day. All kinds of things happen with intuition, and our subconscious mind can run at a much faster pace and process much faster than our conscious minds. And so that's what intuition kind of is our subconscious mind telling us something. With that being said, to some degree, what we are learning and what we've trained will come out and will show a little bit as intuition, as in, I think the market's going to do this. You're kind of drawing lines like Gabriel does a lot of times, 2 and 3 steps ahead. So I think this is what the market's going to do. And when it does it, you say, hey, I was right. See? My gut told me I was right. My education told me I was right. However, trading intuition is not appropriate unless it's backed by your trade plan. And when I say unless, that means that you also have, not only do you have the intuition sign of, hey, this is a good trade, but you also have the physical sign of, it matches my trade plan. That's when trading intuition is fine. But just generally trading intuition as, I think this is what the market's going to do, that's more of not intuition. That's more of just this is what I think. And it could unfold. It could not unfold. When you get behind your trade plan, you're more solid about it. And sometimes our intuition is telling us, hey, look at the market. It fits your trade plan. Look at it. Pay attention. And when you match it up, that's perfect. That's when all stars align and you go for it. So that's how intuition can fit into your trading. It shouldn't be your trading, however.
So just to get to some charts here, I'm just going to talk a little bit about the setups of today, because I don't know that it's really good to have, I mean, you can have market ideas of what's going to happen, but if they don't fit your plan and they don't fit your setup and of how to get into the market, then I think it's wrong to get into the market just because you know what's going on based upon, like, your brain has seen this before. This market was coming out of a 60-minute level. Okay. Now, technically, I'm defining the trend as up, but as this market's coming out of that 60-minute level into the open and whatnot, I'm thinking just to keep writing this thing short. Now, I never get an entry to the short side, okay? And that's okay, because my longer term, I'm saying up, okay? So I waited. I waited until we got a setup over here of that engulfing bar over here, failure price action, and I got in, okay? And I only took a T1 off of it. But guess what? Market retested my entry, and then it really didn't beat this Globex low over here, and it came back down. And after it retests your entry once and retests your resolve, that's okay, and I expect that to happen, but I don't want that to be happening again, because more than like it means that I'm probably on the wrong side of things. So I took a small stop out there. Now, the trend was I'm defining the trend as up today, but it's coming down. So that wasn't a bad place to be getting in, but by it doing what it did, it stopped me out, and then it continued to range and then break out to the upside. Okay, so that's the catch. Maybe you're at the wrong time for your move to happen, and there's nothing wrong with that. It's just part of the way things are. So you may have that intuition, and it may line up that the trend is up, but the market may be forming really big red bars all the way through the day until one certain point, and then you have to define whether you're taking a counter trend or a trend setup. So I think it's more important that things meet your rules than you know what's going on, because everybody's going to define the market as something different, based upon their perspective, based upon their time frame that they're looking at. I've seen people justify every single type of long, short, and in between there is. It's the markets. There's going to be 1,000 different perspectives on any one bar. So, welcome to trading. Now, you may have the intuition to know that, hey, this is high up here and this is low down here. But it may take a while before that trade materializes, so that's pretty much how I feel about intuition. I don't react on it anymore so much. I just want my simple pullback setup. That's all that I'm looking for. When price fails to do something like this, it fails to break the low, it meets my rules, I get on board. Okay? And that's pretty much all there is to it. Now, did this one work out all that well? No. It was pretty pathetic. But that's okay. I followed my rules. On this one over here, I followed my rules too. Got long out of this. Let me see if I can give you some extra little context here. This just happened to be inside of a 60-minute level. Okay, you see where that 60M is down there? It's just happened to be on a 60-minute level, and so I was looking for a simple pullback in the direction of the trend. And this one worked out really nice. Like, got a T2 way up here, where that Globex high is. And guess what? It turned around on the Globex high. You don't know. So I don't know if that helps at all with that question, but here's just two examples of me following the rules. One trade worked out really nice. selling at the high of the day is pretty cool so far. Is it going to be the high of the day for the whole entire day? I have no idea. No idea at all. But I just want to keep it real simple. I want to buy and sell pullbacks. That's all I'm doing. Now, I was just reading a couple of these other questions. Is this intuition that price is doing what it's doing? I don't know. And to tell you the truth, I feel, and maybe this is intuition right here, I feel that I can explain, and I've really tried to work on explaining what I see and having a system that duplicates what I see be put in place. And I feel that I'm really good at explaining that intuition. I don't know that I am, but I feel like I can explain my intuition into really simple concepts that I find really easy to duplicate, but I don't know that for a fact. So maybe that's a little intuition there. And I think for a lot of those really good traders out there that seem to have this intuition that nobody can exactly put into words, maybe they're just not as good at putting it into words. That's all. I don't know. I mean, intuition is a very interesting thing. Maybe it's the brain learning the patterns and us not being able to quite quantify the pattern, but we know what it looks like, and therefore we react to that pattern again, kind of like that previous slide where we said it's just a matter of pattern recognition type of deal. Maybe that's what's going on there. So just a thought for you. So anyway, that's pretty much all I have today. Thank you guys for asking your questions. Thank you for just contributing here. Huh. 300 batting average trader equals a bankrupt trader. Yes, that's true. Here's an interesting thing. I look at it like riding a horse. You have to tug on the reins and kick with the spurs, while others you just have to touch with your boots. Looks a lot like intuition, but it's not. Well, it's skill and knowing the horse that you're riding. Um, that is really interesting because I do have experience riding horses, and you don't know how sensitive a horse is to your control. And so when you get on a new horse for the first time, you kind of have to give it a couple little kicks because you don't know how sensitive that gas pedal is, if you will be. Or if you're driving a car, you don't know how sensitive that clutch is. Or I'm sorry, when you're driving a manual car, you don't know how sensitive the clutch is. So letting it in and out slowly at first until you find out where that catching point is. But then once you know where that catching point is of the clutch, then it's super duper easy to drive that stick from there on out. Well, thank you guys for joining me today. We'll go ahead and stop this recording. But have a great day, guys, and we will catch you next time.